Okay, let's unpack this. The whole investing landscape feels like it's shifting, doesn't it?
It really does. And the numbers, well, they definitely tell a story.
You see these projections for the global alternative asset market. I mean, figures like $23 trillion by 2026, or maybe $17 trillion by 2027.
Yeah, whichever number you land on, it's huge. Just massive growth projected.
And what's behind it, I saw that BlackRock survey from 2024, something like over 40% of investors are actively looking past the usual stocks and bonds.
That sounds right. And think about 2022, that was just a brutal year for that traditional 60/40 portfolio.
Yeah.
Worst in over half a century, apparently.
So it makes sense people are exploring other avenues looking for something different.
Absolutely. And often this interest in alternatives, it stems from very real world stuff, economic uncertainty, inflation sticking around.
Yeah, that 3-4% CPI in the US just seems persistent.
Exactly. Plus geopolitical tensions. All these things make investors look for assets that might behave differently, maybe offer a bit of a buffer.
Right. Which brings us nicely to our deep dive today. You've pulled together some fascinating material on two big contenders in this alternative space, silver and Bitcoin.
Yeah, both are definitely getting a lot of attention.
They seem to tap into different desires, almost. Silver, it's tangible, you can hold it, it has real-world industrial uses.
And then Bitcoin, purely digital, built on this idea of scarcity decentralization.
But interestingly, both are often seen as being sort of outside direct government control, which seems to appeal to quite a few people right now.
That's a definite part of the narrative for both, yeah.
Okay, so our mission here is pretty clear. Using the sources you shared, let's really get under the hood of silver and Bitcoin. What are their key features? What are the potential upsides? And crucially, what are the risks?
Exactly. We want to lay out the landscape based on the material, give you a clearer picture to help navigate these options.
Perfect. Let's start with silver then. An asset with, well, an incredibly long history.
Oh, absolutely. Silver's track record as money is just remarkable. We're talking over 5,000 years, going back to places like Mesopotamia.
5,000 years. That really puts current currencies into perspective, doesn't it?
It really does. Longer than any fiat currency we use today. And that deep historical root as a store of value, that's something people consider, especially when comparing it to something much newer like Bitcoin.
Definitely gives it a certain weight. And it's not just history. The demand for silver now is incredibly strong. I saw a figure for 2022 record demand, 1.242 billion ounces.
That's the one, a record high. And the really key thing here is where that demand comes from.
Right, because it's not just about coins and bars, is it?
Not at all. Over half of that demand, it was nearly 50% in 2022, and sources suggest it's often over 50% now is industrial. Silver is actually used in things.
Yeah, that industrial side is huge, especially its role in the Green Revolution.
Precisely. It's essential for so many green technologies. Solar panels are the big one everyone talks about.
How much silver do they use? I saw a number like 140 million ounces just for solar in 2023.
Over 140 million, yes, it's a massive amount. But it's not just solar. Think electronics, think electric vehicles.
Ah, yes. EV demand for silver is projected to grow significantly, right? Something like 50% by 2030.
That's the projection. And then you have medical uses, 5G technology rollouts. Silver is just fundamentally important in a lot of modern industries. It's not just a precious metal.
Okay, so strong demand, both investment and industrial. What about the price history? We saw those peaks around $50 an ounce in 1980 and again in 2011.
We did. But the really interesting thing is that 1980 peak, if you adjust that $50 for inflation,
It comes out much higher today, I bet.
significantly higher, around $190 an ounce in today's money, depending on the calculation. It adds a different lens to those past highs.
Wow, okay. So potential historical precedent for much higher prices. Now, what about the supply side? Is there enough silver being mined?
Well, that's where it gets interesting. Mine supply in 2022 was around 820 million ounces. But a huge chunk of that, often around 70%, isn't mined for silver primarily.
Oh, right. It's a byproduct of mining other metals.
Exactly. Lead, zinc, copper, gold. Silver often comes along for the ride. So silver supply doesn't always just jump up when silver demand or price increases.
That's a really key constraint. And I also read about supply deficits for several years running.
Yes, consecutive annual supply deficits reported since 2021. So demand has been outstripping new supply plus recycling.
Which logically should put upward pressure on prices, especially with that strong industrial demand.
You'd certainly think so. And we have seen surges in investment demand reflecting that. 2022 saw an 18% jump year over year.
Driven by what? Geopolitics, inflation fears?
The usual suspects, yes. And we also saw physical silver ownership jump significantly in 2023 by over 20%, people wanting to actually hold the metal.
And that rush for physical silver created some issues, didn't it? Shortages, high premiums.
Definitely. Reports of physical shortages were common, and premiums over the spot prices, the baseline market price for immediate delivery, were really high.
How high are we talking?
In 2023, premiums of 30% to 50% over spot weren't unusual for popular coins and bars.
Wow.
That signals really tight immediate supply relative to demand.
Right, buyers paying way over the paper market price just to get their hands on it. Makes sense. Another thing that always comes up with silver is the gold to silver ratio. Or silver to gold, depending how you look at it.
Yes, the ratio. Currently, it takes about 80 ounces of silver to buy 1 ounce of gold, so 80 to 1.
But historically, that average is much lower, isn't it? Like 16 to 1.
The long-term historical average, yeah, is closer to that 16 to 1 mark. And the ratio at which they're actually mined is maybe around 7 or 8 to 1, silver to gold.
So this big gap between the current price ratio and the historical or mining ratios, many see that as a sign silver might be undervalued compared to gold.
That's certainly the argument many silver investors make, that the ratio could revert closer to historical norms, implying silver has more upside potential relative to gold.
Interesting. And silver is also just, well, cheaper, right? More accessible for smaller investors.
Absolutely. An ounce of silver costs, what, about 1.5% of an ounce of gold? Much lower barrier to entry if you want to own some physical precious metal.
Feels less intimidating somehow. And unlike gold, central banks aren't really big players in silver, are they?
Not significantly, no. Their focus is overwhelmingly on gold, so silver's price is arguably less influenced by central bank buying or selling policies.
But other institutions are involved, like through ETFs.
Oh, yes. Silver ETFs, like the big one, SLV, hold a very large amount of silver collectively, over 500 million ounces. So there's definitely institutional investment interest there.
And geographically, Mexico is the big producer.
Mexico is the world leader, yeah. Produces about 24% of the global mined silver.
One last point on silver. Its performance during inflation.
Historically, it's often done very well in inflationary periods,
Yeah.
sometimes even outperforming gold, like during the stagflation of the 1970s or the commodity boom in the early 2000s.
Okay, so summing up silver, you've got rising industrial demand, especially from green tech, its history as money, constrained mine supply, inflation hedge potential. Quite a compelling mix of factors.
It's a complex picture, but those are definitely the key drivers people are watching.
All right, let's pivot now from ancient metal to modern code. Let's talk Bitcoin, often called digital gold.
Right, Bitcoin. Created back in 2009 by the mysterious Satoshi Nakamoto, and its absolute core feature, the one everyone knows, is that fixed supply.
Only 21 million coins, ever. Hard-coded, no more after roughly the year 2140, right?
Exactly. That programmed scarcity is fundamental to its whole concept.
And we're already quite far along in mining them.
Very far. Over 19.7 million have already been mined as we head into 2025. That's over 94% of the total potential supply already in circulation or potentially available.
Wow, okay. So the new supply entering the market is already quite small and shrinking.
Correct. And the technology behind it, the blockchain, that's key too. It's a decentralized ledger.
Meaning no single person or entity controls it.
Precisely. Transactions are recorded publicly, immutably, meaning they can't be changed once confirmed, and transparently across this huge network of computers.
And secured by proof of work, that's the mining process.
Yes, proof of work mining. It's computationally very intensive, requires a lot of energy, but that's what makes the network secure. It's incredibly expensive and difficult for anyone to cheat the system.
Okay. Now the price. Bitcoin's price history is just wild, isn't it?
Wild is definitely one word for it. I mean, from fractions of a penny back in 2010.
To over $73,000 in 2024. With that previous peak around $69K in 2021. Just incredible swings.
Absolutely. And the average annual volatility is often cited as being somewhere in the 60 to 80% range.
Which is way higher than gold or silver. Gold's maybe 15%, silver 30%.
Roughly, yes. Bitcoin's volatility is in a different league. What drives these huge swings? It seems like sentiment plays such a massive role.
It does. Market sentiment, speculation, news flow about regulation, adoption, technological updates, even macroeconomic factors. Because it's still relatively new and people have such strong differing opinions on it, those factors can really amplify the price moves.
So for anyone listening, understanding that volatility and your own tolerance for it is just paramount.
Absolutely critical. It's not for the faint of heart or for money you might need soon.
Definitely not. And that regulatory picture you mentioned, that adds another layer of uncertainty. Constant headlines about the SEC, the IRS, other global bodies.
Yeah, the regulatory landscape is still very much being built, isn't it? Lots of ongoing debate and risk there.
For sure. But despite that, we have seen growing adoption, even at institutional levels.
Right. Big companies like Tesla, MicroStrategy putting Bitcoin on their balance sheets, and even a country, El Salvador.
Exactly. Those are significant steps towards mainstream acceptance, even if they come with debate.
But we also have to talk about the energy consumption. That's a major criticism.
It is. Bitcoin mining uses a huge amount of electricity. Estimates put it around 140, 150 terawatt hours a year.
Comparable to, what, a whole country like Sweden?
Something like that, yes. It's a serious environmental concern, and there's a lot of ongoing work and debate about making mining greener, using renewable energy, or shifting to less energy-intensive methods, though Bitcoin itself remains proof of work.
Okay, another unique Bitcoin thing. The halving events.
Ah, yes, the halvings. Roughly every 4 years, the reward that miners get for adding new blocks to the blockchain gets cut in half.
Which means the rate at which new Bitcoins are created slows down even more.
Exactly. And historically, these halving events have often preceded major bull runs in Bitcoin's price. Reducing the new supply flow seemed to have a tightening effect.
Interesting. So built-in supply shocks. And you mentioned earlier value being based on the network effect. Can you explain that a bit?
Sure. The network effect just means that as more people use Bitcoin, whether for transactions, investment, storing value, the network itself becomes more valuable and useful to everyone. More participants strengthen the ecosystem.
Got it. Like a social network being more valuable, the more friends are on it.
Kind of like that, yeah.
Yeah.
And while one Bitcoin is very expensive now, it's highly divisible.
Down to a Satoshi, which is tiny.
A 100 millionth of a Bitcoin.
Yeah.
So you can, in theory, transact in very small amounts, which helps its potential use case as actual digital cash.
Okay. But the digital nature also brings risks, right? Custody, hacks.
Big risks. The crypto space, unfortunately, has seen a lot of hacks, scams, and exchange collapses. Billions have been lost.
Yeah.
So how you store your Bitcoin, protecting your private keys, it's
Oh.
absolutely crucial. Not your keys, not your coins, as they say.
Right. Okay. So we've looked at both individually. Let's put them head to head now. Silver versus Bitcoin. How do they compare directly on key points?
Okay, let's try. Supply and demand first. Silver. You've got that strong, ongoing industrial demand plus investment demand, meaning relatively slow-growing mine supply, maybe 1–2% a year.
Versus Bitcoin. Strictly finite total supply, 21 million cap, with new issuance slowing down automatically over time. Very different dynamics.
Completely different than volatility. As we said, Bitcoin is significantly more volatile, maybe 3 to 5 times more than silver historically.
And the drivers of that volatility seem different too. Silver seems more tied to industrial cycles, economic growth, inflation, monetary policy.
Whereas Bitcoin can be heavily influenced by sentiment, news cycles, regulatory announcements, tech adoption narratives, even just pure speculation, much more momentum-driven at times.
Okay. What about as a store of value? Putting aside the volatility for a second.
Well, silver has that incredibly long history, thousands of years. It's proven itself across empires and eras.
Yeah.
Bitcoin, well, it's less than 20 years old.
Still very young in comparison. And we saw how they reacted differently during that COVID crash in March 2020.
Right. Gold and silver took an initial hit, but recovered relatively quickly as safe havens. Bitcoin plunged much harder initially, over 50%, behaving more like a risk asset.
So their roles in a crisis might be quite different based on that limited history for Bitcoin.
It suggests that yes, silver seems perceived more as a traditional safe haven, Bitcoin perhaps more as a high beta risk asset, at least currently.
What about as an inflation hedge? Silver has the historical track record there, like in the 70s.
It does. Silver has generally shown a positive correlation with inflation over long periods. Bitcoin's record is much shorter and, frankly, more mixed.
Yeah, the digital gold narrative suggests it should be an inflation hedge because of the fixed supply, but its price action hasn't always followed that logic, has it?
Not consistently. Sometimes it's moved more with tech stocks or other risk assets, even when inflation was rising. The jury's still out for many on its inflation hedging credentials in practice.
Okay. Accessibility and ownership. Buying them, storing them.
Different challenges. Physical silver, you can buy it from dealers, maybe even somewhat anonymously in person, depending on the amount and location. Then you need to store it securely safe deposit box, home safe.
Bitcoin, you usually need an exchange, which means KYC, know your customer regulations, ID checks.
Mostly, yes. And storage is digital. You need to protect those private keys. Hardware wallet, software wallet, understanding cybersecurity. It's a different skill set.
And different risks, too. Silver isn't vulnerable to cyber attacks.
Exactly. But physical assets could theoretically be confiscated by governments, as gold was in the U.S. in the past.
Whereas Bitcoin, while hard to confiscate directly if you hold your own keys, could face regulatory crackdowns or own tax on the network infrastructure or digital seizure attempts. Different threat model.
Very different. Physical versus digital risks.
Performance-wise, historically. Putting the volatility aside again for a moment.
Well, Bitcoin's annualized returns since inception have been astronomical, over 150% in some calculations. But again, with extreme volatility, you had to stomach huge drawdowns.
Silver's long-term returns are much more modest, maybe 6–7% annualized over the last 50 years. But that also came with significant ups and downs along the way. Not a smooth ride either.
Definitely not. Both require patience. And finally, their core value proposition. Silver's value is really anchored by its physical properties and industrial utility.
It's used for stuff, essential stuff.
Right. Bitcoin's value is more based on its network effect, its digital scarcity, and the belief that it will become a widely accepted store of value or medium of exchange in the future. More potential, perhaps, but less tangible underpinning right now.
Okay, that's a great comparison. So considering all that, who is the ideal investor for each? Or is that too simplistic?
It's probably a bit simplistic, but you could generalize. Silver might appeal more to, say, a more conservative investor, someone looking for a tangible asset, something with industrial demand supporting it, potential inflation hedge with a long history.
Okay, and Bitcoin?
Bitcoin seems more suited for an investor with a much higher risk tolerance. Someone comfortable with extreme volatility, looking for potentially transformative, outsized gains, and who believes in the long-term digital asset thesis.
So, very different profiles. It sounds like both could play a role in diversifying away from traditional fiat currencies, but they demand completely different approaches and mindset.
I think that's fair to say. They aren't interchangeable alternatives. They offer different potential benefits and carry very different risks.
Could someone argue for holding a small amount of both, kind of hedging bets between the tangible and the digital?
Absolutely. A diversified approach across different types of alternative assets, including perhaps both silver and Bitcoin in small allocations, could make sense for some portfolios, trying to blend potential stability with potential upside.
But it really comes down to your personal situation, right? Your risk tolerance, your time horizon, your own view of the future.
Exactly. You need to assess that honestly. Maybe silver offers more perceived safety in an economic downturn, while Bitcoin could, theoretically, thrive more in a rapidly digitizing world.
So the final advice seems clear. Understand what you're buying, do the research, grasp the fundamental differences, and be prepared for potentially big price swings in either asset.
Couldn't said it better myself.
Mm-hmm.
Diversify wisely, know the risks.
All right. As we wrap up this deep dive, maybe one final thought to leave everyone with. We're seeing this increasing blur between the physical and digital worlds in almost every aspect of life.
The convergence is undeniable.
So could we see a future where something ancient and tangible like silver finds some kind of new synergy with something purely digital and decentralized like Bitcoin? What might that even look like for how we think about storing value, or what value is?
That's a fascinating question. How these two seemingly opposite ends of the alternative asset spectrum might interact or complement each other in the future? Definitely something interesting to ponder.